Well, let's say this way. It was a smaller part of it about 6-12 months ago, and it's becoming a bigger and bigger portion. If you look at the four components of inflation, goods inflation is starting to roll back a little bit. But the other three components, which are essentially services, food, and energy, are all growing. And our view is that energy is going to continue to become a bigger part of the story. And the reason is, again, I'm talking about U.S. inflation here, but the reason is energy prices all around the world are going up very, very quickly, led by European gas, Asian gas prices, but also thermal coal prices. So it's an unusual story, but kind of quite COVID familiar. We've had the energies that are used in industrial activity leading the market higher, and the transportation fuel is lagging, and I think that's going to change in the next 6 months.
Why are prices, and particularly those industrial fuel prices, why are those prices going up as fast as you say they are, number one? And what do prices look like this winter domestically in terms of the fuels we use?
Well, so the prices are going up because, remember, we completed the largest ever fiscal and monetary stimulus in the history of mankind. We printed 4.5 times or 3.5 times more money from an M2 perspective, and we handed it over in terms of fiscal spending at 4.5 times larger rate than we did back during the financial crisis. So that's the first reason. That's created enormous demand for goods, which is translated into surging exports. Exports globally are up 30% relative to pre-COVID levels. So China and all the producing manufacturing countries have been trying to meet that demand. And that's what created the surge in coal, in power, in natural gas. Now, in terms of the mix in the U.S., the U.S. is lucky in a way to have all this domestic energy production. So it's all insulated from what's happening abroad. But I think from an energy mix perspective, natural gas prices in the U.S. are unlikely to get a lot higher than the current levels in our view. So that's good news.
Unlikely to get higher than much higher than current levels. Did I hear you correctly?
Yeah.
Okay.
That's right. Yeah. So I think that's going to help temper electricity prices in the U.S. Is going to help temper winter heating bills, and whilst the rest of the world is going to have to pay an arm and a leg to stay warm this winter. I'll tell you that.
Well, Francisco, meanwhile, we have more kind of rhetoric, if you want to call it that, out of Washington on a carbon tax. So I wonder, it seems like we're getting the effects of a carbon tax because cap and trade exists in Europe without the rebates that were supposed to help low-income consumers cope with that, with higher, energy prices and all the rest of it. We just got a Deloitte survey saying that low-income shoppers are going to spend a lot less this year for Christmas. Obviously, they're feeling the squeeze. What is your thoughts on if the carbon tax were to rear its head again?
Well, again, the carbon tax, if it's implemented in the U.S., it's going to take a while. It's not going to impact inflation this year or next year. But in Europe, the effects of the carbon tax are very visible. If you look at margins, whether it's refiners or you're looking at petrochemical companies or steel companies, they're getting really squeezed in Europe. So we already have an industrial recession building across the European Union. And sure, a lot of it is natural gas, but in many cases, 25, 30, 40% of it, it's actually the carbon tax. So I think politicians in Washington are going to look at that and think, is this what we want to have here? But again, it's not going to have an immediate effect. Now, longer term, a carbon tax, we think, will add to inflation. We just estimated a couple of weeks ago, came up with a report saying it could be between 1% and 3% inflation pressure over the medium term, building from this carbon tax idea, from the fact that we need $5 trillion a year to decarbonize, and we got to find the money somewhere.
Shepard Smith here. Thanks for watching CNBC on YouTube.